thank you. I would have. All right, good morning, Predicted Trades family. Gonna wait just a couple of seconds, let folks get into the live stream. I'm feeling a little under the weather today, so I'm gonna make this short and sweet. All right, looks like we got a few people in prep. I'll go ahead and get started. So, what a day in the market yesterday. If you've been tuning into prep this week and you've been paying attention to what I've been talking about, we had this trend line from the lows after this recovery on Thursday and into Friday, which set us on a path to get back to the daily moving averages. The daily 8 is this cyan line, the daily 15 is this orange line, the daily 21 is this white line. So we rode that trend line, and then yesterday, pre-market, we were testing that trend line at the bottom of a squeeze. And so I talked about a simple premise. And hold on, Richie's birds are distracting me. I'm going to drop out of there. So we had a very simple premise yesterday. We have to hold that squeeze bottom and get above this trend line to keep going higher to the daily mean. Yesterday, we could have reached the daily 21 easily, right, if we held and went up. But ultimately, we did not hold the trend line. Pre-market, before we even opened, we were down on the trend line, right? We actually opened, let's see, where did I mark that? Oh, okay, yeah. So this shaded area is Monday's high and low. So the weekly range that I've been talking about. We were, come on, toss. We were peaking outside of that weekly range. We came back, we needed to see a bounce. We did not get that. We opened right in it. SPX actually opened, we'll talk about it when we get there. Ultimately, we start to slip down to the daily 8 and where POC is at 40.13. We tried it to settle at POC, but once we gave out POC, it was dive mode. And I drew a trend line in there yesterday and told everybody there's no point to go long until we break over that trend line. Come on. There we go. So we never ever broke over that trend line, and every time we tapped it, it set up another short opportunity. So even if you missed the first entry when it settled on POC, and we did pick up a long to try to catch the bounce to get back out of this. Sorry, let me take this off. There we go. We let it settle here at POC, tried to pick up some calls for the bounce. The second it dove through, came back and retested and rejected. We cut those calls, switched over to puts, rode those on down. Lots of big moves, big trades in the room yesterday. I saw a number of folks that had enormous days, 15K days or better, Um, Shout out to Star and Hedgemate. I know you guys crushed it, as did most people. So, looking at today, um, in each prep this week, I talked about once we gave up that trend line, and let me go back to 30-minute. All right, I talked about once we give up that trend line, we can very easily go to test or take out this zone that we pushed off of on Friday. We tore through that zone. You can see we caught a little bounce at it and at the bottom of a 4-hour squeeze just to hit that trend line and set up the next leg. So we had one leg, a settle, 2 legs, a bounce, and then a 3rd leg. So we took out that zone and we are back down at the zone from the low of year. From that sell-off that bottomed last Thursday, we have a new low of year at this 38.55. So we didn't quite make it yesterday, but the overnight folks said, why not just complete the journey? So that is why we caught that little bounce once we got there. That is the low of year. Basically, the premise today is pretty simple. We have levels below with our Keltner and a key level. If we give out this level from low of year and another important key level at that 38.43, should we slip that and even pop and reject it, we are likely heading down to the zone created at this 37.41, 37.89, or 37.59, sorry. But after such a big day down, I'm kind of expecting that we hold this zone and start to at least get back to test the zone above that we gave out. But as always, the market doesn't have to do either of those scenarios. It could just settle and go sideways in between pre-market high and low. So, simple premise, let's see if this can hold. If so, I'm not going to be scared to play along today. If it rejects, I'll be ready for shorts. But, yesterday erased like the last week or so of upside. So let's see if buyers step in here. There is a lot of bad news going around, bad sentiment here, there, and everywhere. Tesla was down so hard because potential removal from the S&P 500 for Tesla. They just dropped unemployment, and it's rising. So they can, they can take us lower. You can absolutely go lower. And I did say in a prep, trying to remember now. I did talk about in a prep, back here when we were trying to get a double bottom on that 3101. So just a couple of weeks ago. In a prep, I talked about even though we are seeing this downside, we aren't really getting down to extremes yet. And we even did a measurement to show from the highs. Come on, toss. Yeah, we're only down about 20% from the highs, so one thing we did talk about in that prep, as I'm just trying to recall everything, is that we could revisit 12,000 and 11,000 before the market truly finds a bottom. because that measurement-wise is getting more to like that 30% correction. And here we are, already under 12,000, and, you know, about 800 points away from testing 11,000. Let's go 283 here real quick just to see. Why did I talk about 11,000? Because it's the consolidation that we had right here, this flag that broke out. There is support there. So we can go lower. But ultimately, let's just dig in on the premise for today. Very much like on ES, NQ, back down at these lows that we moved to higher. Off of last week, let's see if they hold us and allow us to get a little bit of a bounce to retest some of the things that we lost yesterday. If it gives out those lows, again, we are likely heading down. We have that third Keltner down at about 11,300. So, I'll drop some levels before we open, but we're getting close. So, I'm just going to tear through names, guys. Ready, not down as hard and not down at its lows from the last week, so they didn't kill small caps quite so hard. Let's see if it plays kind of catch up and falls to get to those lows. That would mean yes and NQ are probably losing their lows and heading lower, but Ready could be a good early indicator that if it can base and start heading up, the other indices might do the same. YM is back below those lows already. So we looked at ES, right at those lows and bouncing a little. NQ, at those lows and bouncing a little bit. YM, below those lows and rejecting a little bit. So, just what's dragging us down? Where's the weakness? Right now it's in YM. And, you know, like I saw some reports that, oh, because of inflation, they're really hurting. They're going to take money out of tech and put it over into the staples like YM, you know, like energy, inflation-proof stuff. Well, we'll just have to see if that happens, right? Right now, YM's looking a little uglier than NQ. But anyway, let's see if it can get back above the low from last week and push off of that. Basically, it's oscillating, clinging to this second Keltner down. Let's see if it can also hold above pre-market low. If not, we might be starting the journey lower to third Keltner down. Apple. Oh, we kind of talked about how Apple wasn't really showing the best relative strength the last couple of days while the market was heading higher. And it sure was weak yesterday and just dumped from that high 47 down to below 140. As we're settling lower, we're back at this previous all-time high. We've got a nice zone of support here, 138, 138.79. Let's see if that can hold Apple and send it higher. If not, we've got third Keltner at 136. And 132.6 is another key level, a little lower. But again, we've fallen so hard, third Keltner is usually getting into oversold, and we're starting to arrive at key levels. So just keep an eye on this range, on this zone, to see if it'll hold for Apple. It is the lows that it's from last week that it bounced at. Let's see if it can cause a bounce again, giving us a double bottom to maybe get up and take out the, get back to the mean. And you know, on everything, I don't need to jump back to ES to explain. When we started this rise up, the mean was up higher, and it slowly works its way down. Now the mean is not so far away, so if we catch a double bottom, it's a quicker, easier trip. AMD tried to hold the entire market up yesterday by her little lonesome, but ultimately you get a big fat daily squeeze. We're not going to get through it. And AMD played catch up. I talked about that yesterday. In prep, I think even, but I definitely brought it up, when we were at that first base on ES that, things are trying to pump while market is slipping. If market keeps slipping, those things are going to come back and you play kind of a catch-up trade. So AMD provided that. Please go take a look at what those 100 puts did. It was pretty nice. If I remember right, it was something like they hit beast and ran something like a 1 to 4, 1 to 5, something like that. Maybe even more. I didn't really check in today on them. But AMD back at the mean, trying to bounce. Let's see if it wants to try to keep leading to the upside. There was a lot of bullish sentiment here. That's not going to just go away. And they might wait for the market to settle, but overall this could try to lead again. So upside plays, AMD would be probably a decent one. Amazon, not quite back to the lows. So relative strength, right? Apple is back at the lows. Amazon is not. AMD, a lot of bullish sentiment there. For Amazon, looking like it's about to open, at this consolidation at around 21.45 and 21.15. So, let's see if that pre-market low can hold. Let's see if it can start to try to recover. And, for the market being down like 3% or so yesterday, they could have crushed Amazon a lot harder, is all I'm saying. It's definitely dropped a lot. But definitely going to keep an eye on it, because we're getting only a couple of weeks away from that split. And that mean is getting closer and closer to 2,400. Cat. And Cat tapped that daily mean, ran right up to the 50, rolled right over. That's why this is just another example of why we watch daily moving averages. It is the target for where are they trying to take something. Also, the first 30-minute gets up and above. The next 30-minute peaks above, and when it goes back below, that's a perfect short opportunity. So another reason why we track moving averages. Let it get to it and over it, and then once it loses it twice, it's time to short. Cat is back at that 205. And now we have a, stop that. What are you doing? Now we have a daily squeeze that's forming right underneath that 200 at 197. So if they want to take Cat down further, 200 is a very big level that we should see a bounce. It might slip it a little to tag 197 in this squeeze bottom. But if we can hold 205 and start trekking higher, we have all the liquidity right here. So if we do see kind of a cover pop today, watch these liquidity level, these moving average levels on Cat as targets. Starting to kind of feel a little icky, so I'm going to just zip through names. Facebook, back at its gap fill. Let's see if it fights to get back out of that, or if it's going to use this opportunity to go fill that gap. We do have a daily squeeze right at the bottom. Yeah, daily squeeze. Let's get this over here. so that I don't have to guess. All right. So keep an eye on this shaded region that is an old gap from the gap up on earnings. We got into it and fought out of it. So let's see if it wants to try to do that again. Or if it rolls, probably means market's going to roll, take out last week's lows. So Facebook will likely go to test last week's low. If it gives that out, it's going to fill the gap. But if market can catch a pop and we get back out of this gap fill 193 level, it could play a nice long up to 200. Google. Haven't really been liking Google's chart lately. Kind of been leaving it alone. Overall, it's just gone from squeeze bottom to squeeze top. Now we're back at bottom. We have a daily that's starting to form right here at that 2180. So if things do head lower, kind of expecting Google to at least hold this squeeze bottom, which will come in to today at that 2180, down to 2150. GS. Banks did not get hit so hard yesterday. I mean, that looks kind of like a normal ATR down. Gapping down to this Keltner. Let's see if it can hold at 302, 303 to move back and fill the gap. Also watch psychological 300. We bounced before we got to it last dip. And we got those daily squeeze bottoms if we go down. JPM, no real interest. Almost made it to the mean, fell back out. Pretty much like everything. Microsoft. This is a daily squeeze that it says is still intact. So you'll see that shaded zone pop into today. Let's see if that is enough to hold Microsoft up and start to send it back to fill the gap and to try to recover some of yesterday. If it actually gives out that daily squeeze, since it is starting to open up and get thinner and thinner, we already have third Keltner down here at that 241.5. Netflix. Kind of expected to see Netflix back down at lows, so possible relative strength in streamers. And if we can get a pop, you know, obviously it's a fight back to this 182 Keltner, 184-ish daily 8, 186 daily 15. NVIDIA. Trying to show strength. Chips looking like they want to try to lead a cover pop. So definitely going to keep an eye on that to the long side. If it dips, it takes out pre-market low. We'll have this Keltner and what looks like a daily squeeze forming. Down below for support. QQQ. See if we can hold last week's lows. Looks like we got a little squeeze popping up here. Jesus. Toss is getting on my nerves today. 1 hour squeeze. Here kind of near the lows, the overnight lows, or pre-market lows. So let's see if that hourly squeeze can provide us support. Already looking like we want to try and pop and cover this gap. Upside, obviously fight to get back to 295, last place that we tried to settle, and 300 where the daily 8 is. If we had lower, the third Keltner's down at 280. Roku. Hey, look at Roku. One of the only names that started diving through its moving averages and still opening kind of near them. So these squeezes definitely keeping Roku propped up. Let's see if the squeeze bottom can keep adding support for Roku, and if it will start to take out and get above 100. Fire the squeeze up, get back to the daily 50, but we do have a daily squeeze that's starting to come in here on Roku. Chop. Huh, again, did not kill shop like we might have thought they would have yesterday. It's technically, I think, close to opening flat, maybe. So, could be some relative strength in shop as well, but we do have these squeezes in place. So that's kind of the range to play. Snow, no interest. About to remove this off our ticker list so we can stop looking at it. If anyone wants to save it from the chopping block, let me know. SPX. Woohoo, a 4-hour squeeze has formed on SPX. We've got this key level, 38.83. We have last week's low, 38.58. That's kind of your zone of support. With that 4-hour squeeze bottom, we can, as crazy as it sounds, we can have a crazy rally day today. Not to get anyone's hopes up for that, but you never know. Get near a 4-hour squeeze bottom, catch a tap. I mean, go look at FOMC, right? The last FOMC, we ripped up one day, ripped down the next. Yesterday we ripped down. You never know. Be ready for a pop. Be ready for sideways. Be ready for further down. SPY already coming to kind of test the last spot that it bounced before heading lower overnight. If it can get through there and hold 390 in the cash session, we can potentially move back up to that 395, and the daily 8 will be stepping down to 400. If we give out pre-market low, 380, 378, third Keltner. SQ. Oh, this baby is about to gap up a little and looks like it wants to lead off of this squeeze. 2-hour and 4-hour are in place, and they're looking a little bullish, a little bearish. So obviously everything's looking bearish. But chips and SQ looking like they might want to lead. Any kind of upside pop. 9:15. All right, let's wrap this up. Tesla. Heard a rumor yesterday that it's being removed from the S&P 500 because of that fatal crash issue that's going on. A lot of bad news, headwind for Tesla. But at the same time, I've also heard a rumor that down at these levels, the Twitter deal might fall through because he won't have the money to back the financing that he got to make that purchase. So we'll have to see. We're down at these key levels. If the 690 gives out 681 and this zone around 650. If we can hold this, 718 is where we bounced last Friday, I believe, or Monday. 718 is the target to get back to the upside. And VIX, not VXX, VIX. Please, if this sounds new to you, you're not watching prep, and go rewatch the last week of prep. Talked about if we slip below 30 on the pop that we had Thursday into Friday, once we slip below 30, we can get down to 25. Once we get to 25, we can go right back to 30. So we got that in one day yesterday, basically. Now we're at 33. Rejecting it pre-market. Let's see if 33 keeps us down. And if we fade back to 30 and these daily moving averages to settle and catch a bounce on VIX, which would mean for the market catching a little bit of a cover pop and then going back down. So keep an eye on VIX and these moving averages to see if it catches a bounce or if it can continue this nice downtrend and come back below 30. That's it for today. Hope prep was helpful. I'll see you guys in the room. And apologies for sounding like a sick dog. That's kind of how